Cryptocurrency, the favorite investment vehicle of about 1.5 crore Indians, is probably having its own lemon crisis moment. The prices of many cryptocurrencies have fallen drastically, 99% in certain cases. Investors have lost anywhere about 40 billion US dollars globally. So, what is set to happen here on? Should investors stick to certain coins like Ethereum and Bitcoin, or should they continue to invest in other cryptocurrencies as well? Should investors move out of the stable coins, or can they still hold on to them? These are certain questions that many retail investors may be asking. I'm Sachin Dave, senior editor with Economic Times, and I'll speak to some of the most affluent voices in the crypto ecosystem. Let us first talk to Aditya Singh, one of the most popular crypto influencers in the country. Now, going forward, what do you think should Indian retail investors do, and how should they evaluate when it comes to tokens and coins and stable coins?
To evaluate crypto projects, there are a few things that investors can do. First, they should always evaluate the white paper of the project to understand whether they are working on a project which will solve some real world problem, and will it have a use case? Will the token have the utility? So that is one of the most important thing, because you always need to keep this in mind that most of the crypto projects are still in early phase. They are in an experimental phase, so there's no telling whether they'll succeed or not. So always keep that in mind. So it is good to go through the white paper to understand their vision, what they are trying to build, and does it actually make sense? Is it something which is required and it is going to change the way we communicate with technology or any real world problem? The second thing that you can do is you can evaluate the team. Look at the team, their backgrounds, which companies they have worked with, projects that they have worked on before. Also look at VCs that have invested in projects. So nowadays a lot of VCs do early investment in a lot of crypto projects. So that also gives a good idea. And the third and the last one, which is the most important one, is token matrix of the project. So that is something that investors should always evaluate before buying the token. Look at the token price, look at how the token was distributed between team, investors, public sale. Look at the total supply, then look at circulating supply, how the unlocks will happen, and then look at the entire market cap and fully diluted market cap. So that also gives a better idea.
We talked to Darshan Bathija, CEO and co-founder of Vault, a crypto platform. Thank you, Darshan, for joining us. Now tell us what really happened in the Terra ecosystem and what should Indian investors do from here on?
The Terra ecosystem is an alternate, it's an L1 that is competing with Ethereum and Solana and a few other networks. Their USP really was their programmatic stablecoin tied natively to the blockchain, and in turn its governance token Luna. So Terra USD, which was supposed to behave like a stablecoin, was not really backed by anything, but was supposed to stay at $1 basis the minting and burning mechanism of the underlying token Luna itself. So Luna was a variable asset, so you could expect large swings, and USD was not supposed to be a variable asset, it was supposed to be a stable asset. Now, it grew a little too soon, a little too quickly. And the problem with programmatic assets in general is that there's a significant pressure towards selling, more than the buying demand. The minting mechanism and the fail-safe mechanism, such as selling Bitcoin, needed to kick in to save the peg. Now, what ended up happening is the fear of the peg being broken was larger than the capability to maintain the peg, which meant aggressive hyperinflation on the Luna asset, as well as USD being depegged and doesn't look like it's coming back. So I think a sudden loss of trust, the hurt of brand, caused a lot of people try to exit USD at the same time, which caused downward pressure on both USD and Luna, and both of those spiraled to causing the hyperinflation of Luna and the depegging of USD. So it was devastating for a lot of people. About, I think, between 45 and $50 billion wiped out of the crypto ecosystem in a matter of, I think, 3 or 4 days. So it just anybody who had exposure to that, either of those assets, had seen significant losses.
Also, given the tax rates in India and even the thing about GST being introduced on cryptocurrencies going forward, how do you think Indian investors should tackle in the investment in cryptocurrency? Do you think they should reject their portfolio, or should they sit tight with what they have, especially when it comes to stable coins?
If you are a long-term investor, the high tax rate only applies at the time of a transaction. So if you intend to hold the assets for the medium to long term, it should not affect your behavior whatsoever. So the high or low tax is only when you realize the appreciation. And if you've bought intending to hold on for the long term, as long as you don't actively trade, you have no tax implications, which is great. So the incentive to save has never been higher. With regards to an active trader, however, there are certain tax implications that apply, notably the 1% TDS as well as the 30% capital gains. You would, however, have to try to centralize your trades on a few assets as opposed to chasing the long tail of altcoins. And the reason being, the capability for you to offset what profits or losses against one or the other asset is no longer applies as of this recording, which means you want to ensure that your exposure is in as few assets as possible and as centralized as possible, because you can in turn not incur a large tax liability. So what I expect is folks trading slightly less because of the 1% TDS, as well as people investing in the top maybe 5 or 10 assets as opposed to the new altcoin of the month, whatever that may look like. And with regards to how investors should be dealing with this, I think taking a hard look at your portfolio, seeing how much you've exposed to high risk / growth assets, how much you've exposed to low risk / safety assets, would need to be reconsidered. If you have most of your earning potential ahead of you in your life, then don't worry about your crypto portfolio. You're going to be fine. You'll be able to see through this. But if you're nearing retirement or you're expecting to sell within the next 6 to 12 months, I would say you probably need to reduce your growth exposure in some shape or form.